Chapter 4, Completing the Accounting Cycle, Part 2 of 3, Financial Accounting. This video is going to talk about the closing entries required at the end of an accounting period, which is also the end of an accounting cycle. So accounting is a cycle where transactions are recorded in the journals, transferred to the ledgers, updated through adjusting entries, ensured that they balance through a trial balance, and then financial statements are prepared. And after the financial statements are prepared, you close out the temporary accounts, start all over again with a new accounting cycle. So a lot of this is new information. Time to take some notes. So let's talk about closing entries. Closing entries transfer revenues, expenses, and dividends into the stockholders' equity account or retained earnings, and it zeroes out these accounts to start a brand new accounting period. So we're going to have a new entry, a new account called income summary. It's not a revenue or an expense, it's not an asset, it's not a liability. This is a temporary account only used in the closing process to make it a little bit simpler. You'll learn a little bit more about this in a minute. In the meantime, I would suggest you take notes that write down that income summary is a temporary account. So let's look at the different temporary accounts. Temporary accounts are closed. Makes sense because they're temporary. Permanent accounts are not closed. Another term for these, good for your notes, nominal, real. So let's make a list of the different temporary and the different permanent accounts. Revenues, expenses, and dividends, temporary. Assets, liabilities, and all stockholders' equity accounts are permanent. When I say all stockholders' equity accounts, I'm talking about common stock and retained earnings, because all of the revenues, expenses, and dividends that have updated retained earnings will be closed. So let's talk about the closing entries. This is a transaction that occurs when you record the entry that makes the income or the loss and the dividends transferred over into retained earnings. And if you recall from one of the first chapters, we said that retained earnings are earnings retained in the company. And the way this occurs is over time, cumulatively. Retained earnings are never closed, but the income and expenses and the dividends are all transferred into retained earnings. And we're going to see how that occurs in a minute. As we've said, income summary is a temporary account that is going to be used in this. So here's the closing process. It's going to reset expenses, revenues, and dividends to zero, and to summarize everything and transfer it finally into retained earnings. So we're going to look at identifying the accounts for closing, recording these closing entries and posting them, and showing what a post-closing trial balance looks like. So first let's talk about, again, temporary and permanent accounts. Temporary and permanent, liabilities, assets, and retained earnings. So the closing process only occurs within these temporary accounts that we have. So here's our trick, and this is my hint. It's called REID. If you know of anyone by that name, read. It helps you, the mnemonics help you to remember what you close. Revenues, expenses, income summary, and dividends. REID. Now, that should be pretty simple to memorize on an exam. I've seen hundreds of students write the word read on their exams. There's only one trick, and that is that each of these is closed to something a little bit different. So the first two close to income summary, and then income summary and dividends are closed to retained earnings. So here's the closing process, and let's go through this sample quick and easy entry. This is not net solutions as we've been following. This is just a sample to talk about the closing process. Notice income summary is just sitting out here by itself, has nothing in it, and we've lumped all the revenue accounts together just for theory purposes. All of our expense accounts, and here's our dividend accounts. Each has a final balance. That's what this part is your ending balance. We're going to close those that require closing, and we're going to use income summary. And note that retained earnings, which is not closed, is going to be updated. So we're going to update our retained earnings through the closing process. And this is where stockholders' equity comes full circle. Okay, first, close revenue to income summary. When we say close, we're going to make a journal entry that moves revenue to income summary. And notice what the ending balance is? Nothing. 0. E, close the expense of $10,000. So when we zero out the expense, we've now got a 0 in our revenues, and we've got a 0 in our expense accounts, and income summary has been updated. Now stop and think about what this is doing, because this is one of those very logical, self-evident accounts. Income summary summarizes income. We have summarized revenues of $25,000 and expenses of $10,000. And look what this is. Revenues minus expenses is equal to net income. And in this example that I'm providing, net income of $15,000 has been updated. So next we close income summary, RE, we're on the I, we're going to close income summary to retained earnings. So income summary is just used very temporarily. It's time to zero it out. So the balance in income summary equals net income. Let's get rid of it and move it to retained earnings. So what we've got is that income summary here moves over to retained earnings here. So now notice R, E, and I. Revenues, expenses, and income summary are all a 0 balance. And let's see if I can get this to work, to just make a reminder that if the debits and the credits are equal here, there's nothing left in this, there's nothing left in this, those are my zeros, and there's nothing left here. They're zeroed out. So the last thing, D. So the last transaction, closing dividends, zeroes out dividends, and retained earnings have now been updated, and our closing process is complete. Really not hard. 4 entries. R, E, I, D. So let's summarize this in journal entries. No explanations here, but this might be what one looks like. Close revenue, and this is a little strange, so it might look a little different to you now. Revenue has a debit in it, and that's because we're closing. This company has 2 different types of revenue, consulting and rental. We close this to income summary. Next, we close each individual expense account, and that's a big reminder that each one needs to be closed. You can't just write the word expenses, but you have to close salaries and insurance and rent and depreciation expense, utilities. Each one has to be closed. Close an account such as expenses that normally has a debit balance with a credit. Next, close income summary, and it's going to be closed to retained earnings. So income summary now has a 0 balance. Finally, we'll close dividends to retained earnings, and our transactions have come full circle. So let's take a look at what this might appear with T accounts. Temporary, permanent, and this special account, which is temporary, is only used for closing, and of course we know that to be income summary. And notice what's happening here. We've got revenues and expenses and dividends all closed out, and the final result is that everything ends up in retained earnings, and retained earnings have been updated. And notice each account has a zero balance because these are all temporary accounts. So the results of a post-closing process is that all the temporary accounts have zero balances. There's nothing in there even for a trial balance. They are done, they're out, they're zeroed out, so we can start a new period and see how our success looks. Now, I have to give you this one reminder. In fact, it came out recently, that quarterly earnings. So as I'm thinking about what's happened in the year 2017, Snapchat released their first quarterly earnings. They recorded revenues, expenses, and dividends. They didn't pay dividends. And they recorded a loss. But they closed their books to show that that accounting period was finished. All their temporary accounts had a zero balance. And every single business in the world has a closing process. The retained earnings is updated. The equity of the owners at the end of the accounting period have been updated. And nothing has been touched in retained earnings during the year until the end. And then at the end, after we've posted our closing entries, retained earnings has been updated to show revenues and expenses and dividends. Or, as I like to say, earnings that have been retained and not distributed as dividends. Permanent accounts are not closed. You never touch the assets, the liabilities, or any of the equity accounts. Post-closing, you can see that the ledger is still in balance, and there should be only assets, liabilities, and a couple of stockholders' equity accounts. So let's see what this one looks like. Here's Net Solutions, and if you note that Net Solutions, this is called their post-closing trial balance. First thing we check to see is, yes, it balances. And notice that there's only asset accounts. These are our asset accounts. Quick reminder that accumulated depreciation is a contra asset. There are 3 liability accounts right here: unearned rent, wages payable, and accounts payable. And finally, here are our 2, the common stock and the retained earnings. These are our 2 equity accounts. We are in balance, and that stops the cycle. So essentially and truly, you have come full circle. This is the accounting cycle. Anyone that wanted to understand more about bookkeeping, this is the bookkeeping process. It's completed most of the time. It's electronic. The transactions are recorded electronically. The whole purpose is to record the history of a company. And so if you Google any financial statement for any company that you'd like to see, you'll find that they have recorded their revenues, expenses on their income statement. They've got a balance sheet. They've got an income statement, statement of stockholders' equity, and all of these transactions have been summarized and gone through the same process, whether it's a mom and pop landscaping company or a giant conglomerate like Walmart. Same process. Depends on how many transactions each of these companies has. One of the interesting things that we have here is that with this post-closing trial balance, it shows that we're done. We're ready for a new time frame, a new accounting period. And this goes back to the periodicity idea about financial statements. So having said this, literally for many of students that have taken accounting in high school, this is as far as the high schools go. They do a lot of repetition. High schools teach a lot of transactions and a lot of closing and adjusting entries, and they stop here. And that's very strong experience for someone that wanted to go into bookkeeping using maybe accounting software to do a lot of data entry. In an accounting college level class, we're going to go much farther beyond what we've done here. And that is, we're going to start talking about specifics related to accounts receivable or related to how we calculate depreciation expense. We're going to talk about how to record accrued interest expense, possibly how to show what happens whenever dividends are paid, the different types of dividends for types of stock. So we're going to dig more deeply. We're going to go into more complex situations than you would in just a general bookkeeping class or a general accounting class that doesn't cover the more detailed levels. But we're really finished with the process. This is the end of the process. What goes on from now on is adjusting entries. More complexities related to the recording of adjusting entries. I like to call them AJEs, or adjusting journal entries. And so for slide 3 of 3, we will be going through a step-by-step process showing the full picture just to give you a giant overview of how this works. I hope this helps. Most importantly, your homework is so crucial to understanding this. It's only required for chapters 1 and 2, but so important for chapters 3 and 4. The quizzes, so important that you go through. They're simple and basic, but I think with a combination of quizzes and homework, looking at some of the pen casts for the items you don't understand, watching the videos that come